Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty. We're doing our weekly market update. And let's just jump right in. I'm going to share my screen with you. We're going to make this as short as we can because we are super busy this week. Whoops, skipping ahead there. Okay, so right off the bat, I just wanted to point out housing bidding wars erupt as 2020 kicks off with some listings seeing over 30 offers. Now, these are reports not from Arizona, but from other places around the country. But without getting into the details, one area being St. Louis, and we are seeing multiple offers here in the Phoenix metro area, as I mentioned before in previous episodes here. But we're not seeing 20 to 30 offers, but we are seeing some multiple offer situations. If a home is priced well, presents well, in the right location, it's going to get multiple offers, right? If it's priced accordingly. According to Redfin, mortgage purchase applications were up 30%. Compared to a month ago. During the first week of January, Redfin agents also reported requests for tours were up 5% from the time of December. And there were 9% more new listings on the market in the 4 weeks ending January 7th compared to a year ago. So that's all good news. I can tell you, being on the ground, being at open houses, getting show requests, lockbox openings in our MLS, and anecdotally for us, we're definitely seeing more activity, and people are either if they thinking about doing something this year, they're definitely ready to do it. They're just maybe waiting for their lease to be up, filing their taxes, or they're already hitting the ground running, especially if they're paying cash. So that's all good news. And We're going to see a little volatility in rates until the Fed stops the nonsense with the back and forth on what they're doing. We should see that. This whole thing should have been settled several months ago, because here's the deal. I've shown you these charts before, but basically, the Fed uses this really wonky way of figuring out shelter costs. Since the 70s, shelter costs are figured by rents. Well, the way they figure it is not a blended rate, which we would kind of go with like through core logic or whatever. Bottom line, they're about 6 months behind. Shelter costs, as far as rents are concerned, have come down. So they're about 6 months behind. When do they play catch up? Probably around February or March, they'll start seeing these numbers come in, which is pretty typical the way they look at those numbers. We got into this whole mess. We should have had lower rates, as we're forecasted last year back in April, May, because the government decided on both sides to spend an extra $2 trillion. When you print more money, when you spend on all these programs and you do all these extra things to print more money, guess what happens? You have more inflation. Okay. So you have all these dollars chasing, too few goods. So I would say, we're going to probably see 5 to 6 rate cuts this year. And I'll get into that more in a second, and what that looks like. So, you know, from the previous week, we saw inflation came down. Uh, as far as all the different inflationary factors are concerned, we saw them come down. Home prices continue to move higher, which we already know, and keep telling people buy now, not later. It's going to cost more. Lock in that payment now on the amount the home is priced at now, or what we can negotiate, and then you can always refinance later. Okay, and the average price and the average homeowner in America is saving about $400 from where they were at the peak of 8% right now, give or take a little bit, depending on credit and all that. But the average, using the averages. Holiday seasonal impact on jobless claims. Initial jobless claims were historically lower during the holiday season, as layoffs tend to wane before Christmas and New Year's. And while continuing job claims have moved lower over the last few weeks, they are still elevated and suggest it's becoming harder for people to find employment once they let go. Okay. Everybody knows there's more jobs during the holidays and people spend more money during the holidays. So obviously that gives an extra boost to inflation, because when you use credit, okay, you go out and buy a truck, that's an inflationary factor. Okay. So, that's just the kind of the system we're in, the economy we're in. Here's our current, just active, all types of properties in the greater Phoenix area, multiple listing service, that 15,746. That's kind of been hanging there in the 15s. So that's really no different. As far as what kind of market we're in, actually, let me skip around that for a second. Pull that over. Okay. So U.S. Treasury is a little wonky again because the feds are saying this or that and talking out of two sides of their mouth. But what we're going to see is by March, like it's talking about shelter costs make up, depending on two ways you look at it, 44 to 41% of inflation, okay, of the inflationary factor. So huge portion of that. So once they finally do their job and catch up with where we are in reality on the ground, which should be about February, March, definitely by March meeting, we should start seeing them definitely start talking about lowering rates. Okay. Then the other big milestone is going to be July. Also, of course, anything come out of left field. If they spend another, print $2 trillion more of money, for whatever, when you get into another war, who knows? But right now the indicators are the two big months to look at as far as the Fed announcements are going to be March and July. And the other big thing besides the shelter costs is the quantitative tightening. They got to ease that down once they get caught up with the shelter costs and where everything is headed. So we're going to see that 10-year treasury, which kind of along, with the inflation rate and everything, because these kind of, investors maybe don't want to buy at the higher rates, right? They're just kind of not as excited about that. And they haven't been for, since this whole debacle has been going on with the Fed debacle. Right now, rates today, again, this is the average retail rate. Again, if you want better rates than this, just in the past week, I seen like a VA loan for in the fives. I see builders still doing stuff in the 3.9, 4.2, 4.5 range for new home builds. A lot of those, some of the builders now, I'll show you in a second. They've got homes that are actually, affordable today's standards. We're also going to see by the end of 2024, because of the drop in inflation, even though some of those factors are baked into the economy, which isn't good because we've got some of that stagflation still happening. By the end of 2024, people's income should start catching up with those numbers. Again, as long as nothing else throws a wrench in that. Okay. The government's usually pretty good at that. So let's keep an eye on them. So that's 6.9. Again, we're going to see that volatility till they figure things out and get their head out and where. But as far as the greater Phoenix area, we're looking at being in a seller's market that's been progressing. We were, let's see, last week when I did this, we were at 112.4 on the Crawford Market Index. We're now at 115.6. If we're below 90 on the index, on the middle dial here, we are in a buyer's market. If we're above 110, we're in a seller's market. And if we're in between there and dead center 100, we're in between that range, we're in a balanced market. Right now, we are in a seller's market, a very mild one, but we are seeing every city starting to tick up towards in the direction or trend towards that, which I'll talk about more in a sec. Supply, let's see, just last week we're at 62.8, we're at 62.4. So that stuff's starting to get eaten up with the extra activity going on. More people are putting offers in, looking at homes, more people are applying for pre-approvals on mortgages. So, again, it's all about supply and demand. This is all about supply and demand. There's just, again, this fallacy going around that we're going to see some sort of silver tsunami. Been hearing about it for years. It's not going to happen. People sell a house. Typically, most of them, about 80 to 85% of them are not investors. Okay. Or give or take a little bit. They're going to sell a home and then buy a home, whether they're downsizing or upsizing. So that cancels each other out. So the true new inventory is going to be from new builds across the country, in the greater Phoenix area and other places, but across the country in general. We are pretty far off of that. We're at least a couple 100,000 homes off of that, if not more. But that's just a conservative estimate. Okay. So demand is on the rise. I just wanted to show you this as one example, one quick example. I showed you one last week from Lennar. And again, don't go to a new home build without a realtor. I prefer it was us, but don't do that. Okay, because if you go there without them, they'll try and say, well, we can't pay your realtor now, and the realtor can't work for free, and you don't want to have to pay them. So, and you want to be represented. Okay, you don't want to go into a courtroom. You don't want to go into probably the biggest purchase of your life up to this point, whatever that point is, and go into it in a bad way and find out things that you should have known and options you had that you didn't know about and how things should go. So anyway, Lennar came out with a product. They're right around, the low to mid threes with that Lennar product. These are in the threes. There's a lot of different builders out there. Quantitative tightening, I mentioned this earlier, removing money from financial markets to stem the danger posed by overheated economy. Okay. And that's what we've been dealing with the Fed, along with their ineptitude. But that's where we are. And hopefully, again, by March, we should see some of that kind of calm. Again, they're not going to show all their hands until they feel like they've done their job. Okay. And really doing their job would be to usually stay out of things, or they get involved too late after it's messed up, which was the case here the last couple of years. But for the recession, and people are going to be in recession, just keep in mind historically we go into recession, except for 2008, which was a housing recession. Housing always does well. Housing always goes up. Rates drop. Demand goes up. Housing always does well in recessions, except for 2008. That was an outlier with a housing crash due to too much inventory, which is not the problem now. And then that led to poor lending practices. Okay. So, unemployment is definitely overall not trending, in the great way. If we get to 4.2%, there's this thing called a sound rule that basically will, we find out about it months later. Usually the government doesn't tell you, believe it or not, that we're in a recession until a few months later. I think on average it's about 5 months later. So, once the Fed stop offloading their, from their balance sheet, we're going to see things and that quantitative tightening stop. So that's I would expect, Barry Habib, Logan down at Housing Wire, they're probably looking at about 5 to 6, going by what all the Fed chairs are saying right now. We're thinking there's going to be about 5 to 6 rate cuts from the Fed funds rate that indirectly will affect mortgage rates. Not directly, but indirectly, it does do that, because then we get into the mortgage-backed securities, 10-year treasury, all that. So I mentioned earlier, for us in the Phoenix area, Fountain Hills is at the top at 178 on the Crawford Market Index, then Chandler, then Gilbert, then Glendale, then Phoenix. These are all, and then Scottsdale, Mesa, Avondale, Tempe. Those are all in technically seller advantage cities, okay, or situations for listings. Peoria, and Goodyear are in, let's see, Peoria, Goodyear, Surprise, Paradise Valley. Those are in a balanced market, but they're, again, all the cities are starting to trend up towards going towards seller. But those cities are in a balance. And then we've got Cave Creek, Queen Creek, Buckeye, and Maricopa City. Those are all to a buyer advantage. So guys, that's going to wrap it up for this week. If you have anything else I can help you with, please feel free to reach out with any questions at all. We love questions. And by the way, just wanted to, we are having a couple open houses this week. Just wanted to throw those out there. There's one of them tomorrow, Saturday, from 1 to 3. at Port-au-Prince Lane in Surprise. Okay, so if you can make it, that'd be great. Or you know somebody, you might want to send them over there. And then over at let's see, Lumberg Street in Surprise. That Look at that pool. It looks great, right? Check us out. We're going to be over there on Sunday, this Sunday, the 21st from 1 to 3. So guys, hopefully you can make it. Or you know someone who can make it. All right, guys, we'll see you next time. Thank you so much.